Good evening to all those who are here in India, and good morning to all those who have joined us from Canada. A very warm welcome to our session on Decoding the Budget 2022. So the Union Budget for 2022-23 was presented by the Honorable Finance Minister yesterday, and the intent of the government is clear. Infrastructure and digital economy is where growth and jobs will come from. The Honorable Minister stressed the importance of private capital in driving growth in the Indian economy and highlighted that the government will continue to take the lead in investment to provide support to the private investments in maximizing their potential. My two bits are also that the budget has been good for both domestic and international business. And in fact, I think ease of doing business in India has become easier, I would say. So as we had discussed with Rakesh just before this, we will be having the budget analyzed and decoded further by our partners from Nexdigm, SKP, and Mr. Rakesh Nangia, who has also been the past president of ICBC and is presently the founder and managing partner of Nangia and Company LLP.
Good morning and good evening, audience who are here. Just to let you know, before I speak on the budget, I have my two colleagues with me, Maulik Doshi. He's a Deputy Managing Director, Direct Taxes, Nexdigm. And I have my colleague Saket. He's an Executive Director, Indirect Taxes of Nexdigm. Thank you so much for coming on this. And let me just give a small, brief overview of the budget before we really have an interactive chat. We'll be happy to take the questions. Most likely we'll try to answer you on a real-time basis itself. Friends, this budget 22 comes with a lot of hopes and expectations where the signs of pandemic apparently has been contained. If you see the budget 22, it looks like a reformist budget and has number of uniqueness and which addresses wide spectrum of the sectors. There has been the highest dosage of expenditure allocated for roads, defense, railways, metro, logistics, housing, water. In fact, it has touched the sensitive points of the economy and is likely to take India to a new growth trajectory. It is also likely to accelerate the entire ecosystem of growth and will work like an oiling the complete growth engine of the economy. I believe that it is going to promote domestic manufacturing. It has recognized the importance and contribution of startup and which it has played and which has brought a revolutionary changes in the economy. To give you a small background, we'll be having 100 startups in a year time, which will be all $1 billion. And the most surprising part is close to $45 billion of money is likely to hit by March. It will cost $45 billion of the startup money which has come in this year, highest ever. On the manufacturing part, let me tell you one thing, with the PLI scheme, the production, the capacity building, the employment it is going to there, it is likely to be mind-boggling. It is one of the most novel schemes which has been announced by the government to see that the supply chain, the manufacturing company shifts from China and other countries back to India to make it a manufacturing destination. And with economy recovering and an elevated fiscal deficit of 6.8% in 2022, in 2023, the fiscal deficit is expected to be between 6.3, around 6.3%. And this is driven by a lot of tax buoyancy and which is within the goals of FRBM. The economic survey which took place, we got a report 2 days back, mentions about the fiscal space is available for the capex has been cemented by the FM in the budget, where very, very high provision has been made for public spending growth, which has worked like a catalyst for the entire economic growth. The capex outlay, you'll be surprised, is more than 35% as compared to the previous year, with a growth rate of 9.2% in the current year. As compared to the contraction of 7.3% in the current year, is actually indeed encouraging, with high frequency indicators like GST collection, freight traffic, direct tax collection, e-way bills generation, fuel consumption, it gives a lot of confidence that the economy is heading northwards. And again, friends, if you see the economic survey, basically, assessment of growth of next year is close to 8 to 8.5%, also reflects that the macro indicators are strong and most segments of the industry and service are about the pre-pandemic level of 1920, except few industries. The FM has laid special emphasis on railways, river linkages, MSMEs, a little bit on hospitality and infra gati shakti. If you do the SWOT analysis, you'll be surprised there are more strength S&Os in the economy today and more feathers in government cap. And this clearly outweighs W and T of SWOT. Friends, with NPA declining, a very good sign of the health of the banking system, mobilization of this capital, public issues of 90,000 crores in the current year, your foreign exchange reserve of 13.2 months import, $630 billion, actually underlying gives a lot of confidence and reflects the soundness of the economy. I believe and I hope the economic disruption is unlikely to repeat. The biggest challenge, which Anita asked also, and very valid question, and which Simran also answered, is the inflation. And my worry is this: today, India inflation is 5.8%, and 6% is actually becomes a threshold limit, which becomes a worrying sign. You'll be surprised. US and UK has an inflation of more than 5 to 6%, highest in last 30 to 40 years. They've never surpassed that. And any tinkering of Fed rate, if it happened in the past, will actually make it a big challenge for the running for the money is concerned. That remains a very big challenge, the number one challenge for the government. Budget has addressed the tax issues by giving stability with no disruption of new taxes, not introducing wealth tax, not introducing succession inheritance taxes. I believe was the need of the hour, and that has given a lot of stability on the budgetary fund, on the tax fund of budget. So friends, this is what I try to summarize it. I'm going to ask very interactive questions meant for the audience basically, and something which will all be very like to know what changes have been brought in this budget. And I'm going to put them in questions to my panelists actually, and I start with the direct tax with Maulik basically. Friends, just to tell you before I ask a question, I must tell you India is the only country in the world which has a faceless regime. Worldwide, it is an e-assessment where you know who is your tax officer. India is the only country where you do not know who is the tax officer. Maulik, to you this question, obviously when you introduce such a massive disruption in the assessment process, what are the challenges you felt were there, and what do you believe has been addressed by this budget after 1 year of experience of faceless assessment in India? Maulik, to you please.
Thank you, Rakesh. Good morning and good evening, everyone. Yes, we had 1 year of experience of faceless assessment regime, and there were significant amount of teething troubles that I would say the taxpayers were facing. And top it up, the government also launched a grandeur income tax website project, which also kind of gave a lot of troubles to taxpayers. Both of this kind of really made the faceless assessment scheme and the faceless assessment experience quite a challenging one for taxpayers. The budget has done a little bit, not significantly, but I think more than the budget, the expectation, my personal feeling is that the time itself would be a better test for how the faceless regime would be accepted. It's more in terms of how people getting used to filing online submissions, kind of looking at notices quite frequently, and kind of responding on time. Most of these are more habitual things that people will get used to. But budget has done two really significant changes that addresses some of the challenges that taxpayer had. First and foremost, they have brought in a requirement to have a video conferencing, a personal hearing through video conferencing, telephony mode, wherever there is a proposition to make any addition or adjustment by the tax officer. This was missing in the earlier scheme. It was more at a discretion of the National Assessment Center, National Faceless Assessment Center, now has been brought in as a part of the law, as a part of the scheme itself. So now wherever there is a variation in the income and the assessee request, the taxpayer request for a personal hearing would be granted through video telephony or some other means that the government may think appropriate. So that's one major change that is there. The second good change that they have brought is that they have actually given more time for bringing faceless tribunal, faceless transfer pricing process, and faceless international tax proceedings. They've given 2 more years to bring it into the faceless scheme. So earlier they had a deadline, and we thought that the government is rushing through this entire thing, not letting it settle. But now they have the deadline is extended, and now they are providing that time to people to kind of get adjusted to the system, see how the system responds, and then possibly extend this to transfer pricing, international tax, and tax tribunal. So I think these are the 2 major things that are addressed by the budget. But otherwise, it's more like how the process and the procedure would work, and we'll have to see how the new portal behaves in the coming months.
Thanks, Maulik. Thank you for giving this insight. Saket, no, indirect taxes affects everybody. Everybody pays GST. Now, only in a brief, can you say some crucial, important points impacting changes which have been brought into the GST law by this budget, which is, and affects the public at large, preferably?
See, in GST, if you see GST, one of the very consistent approach of the government has been since the time it is introduced, is thirsting on compliances. Okay, now because it's now GST, state also have a stake. So typically in these budgets, you don't have those kind of provision. The tariff rates changes, etc., do not happen. Only legislative and procedural things happen in the budget. So one of the hallmarks in this budget also has been to how to increase the compliances. For that, what they have done is now they have brought down several provisions. Provision relating to if, unless until you have filed your first month's return, you cannot file the next month's return. So if you have not filed any previous month's return, you can't file the next month's return. If you file GSTR1, where you report your output tax liability, if you don't file that, you cannot file your 3B return and vice versa. So what has happened is government has brought down these amendments, which requires you to comply with, because if you're not able to file your returns, then your customers do not get the credit. So there will be a push from a customer. So hence you are forced to have your compliances done, and that too accurately. That's one. And one of the bigger change is in respect of credit restrictions. They have provided various provisions wherein the credit will be restricted. So overall, if you to answer your question, stringent tax liabilities or stringent compliance mechanism to encourage compliances, or to rather force compliances, accurate compliances, and be very careful in compliances has been the main theme of the budget. Apart from that, they have done few of the redundancies in the budget. They have removed those redundancies or those provisions, etc. in the budget.
That's wonderful, Saket. Thank you so much. I come back to you, Maulik. Tell me one thing. India is known for high litigation as a country as regarding tax laws are concerned. And we all know any adverse judgment takes 10 years, 15 years. You continue filing appeals. It piles up, reaches to 100 appeals. And by the time the Supreme Court decides, more than 10, 12 years normally goes away in a lot of cases, not in a number of cases. Now, the Budget 22 came up with a scheme that if anything is pending in any jurisdictional high court or Supreme Court, the tax office may not file an appeal. So it does not get cluttered, and it I'm using the word may, bring relief to the companies of not filing a repetitive appeal. Do you think is likely to reduce the litigation? My first question to you is this. Maulik?
Rakesh, here, I think the provision was there in some sort. Obviously, they've extended this and they've kind of provided much better in terms of the scheme. Now, Collegium will decide that you have covered Supreme Court instead of High Court. You cover High Court in addition to the Supreme Court earlier. So yes, they've extended the scheme. They've made this much better than what it was earlier. But the challenge earlier was also the practical implementation of it, whether the tax officers were really actually doing it or not. It was only on paper. I'm sure 50% of the people would not have actually known about such a provision being there as a part of Income Tax Act unless the changes was made in this budget. So the proof will lie there. Whether the tax officer really implements it, they will really take it to the logical conclusion. that's where we'll see if there's a reduction in litigation. So it's very good on paper, but I'm seriously doubting its practical implementation.
Let me tell you, friends, it's a very challenging thing. If I give you one small practical example, by the time your years 7, 8, 10 years would have passed by and you're not filing an appeal for those years, imagine what happens after 10 years if the case gets against you. I don't know what will happen on penalties, what will happen on interest. So those are the very serious challenges. A good intention, but practically still a lot of deep diving has to be done to see how much benefit it brings to the taxpayer.
Absolutely.
Can you tell, I want to understand, Saket, from you basically, what are the reforms introduced to support this Make in India and Atmanirbhar Bharat in this budget?
See, government, this has been the thrust of the government to have Make in India since, I think, 2014. One of the, twin changes or twin methods that the government has been employing is reducing basic customs duty of certain items which are needed as a raw material, increasing customs duty on various items which are needed for your manufacturing, etc., or which they want in India to be manufactured. So these are the twin objective or twin methods that the government has been employing. And government in this budget has clearly articulated, look, that all the benefits, all the customs exemptions that we have been giving, okay, to whatever extent possible, will curtail that. And in fact, for project imports, which was a very important one, which, for larger projects, it was being used. They've in fact said that we'll have a phased wise increase in the basic customs duty for those imports. Those were for capital goods also. So the government's intention is not only the finished goods, but even for, going backward on in terms of the capital goods, etc. You start manufacturing in India. India being a big market and everyone wants to sell in India. Government's agenda is simple. You want to sell in India, come please manufacture in India and sell in India. Otherwise, you make the payment of tax. You pay import duty of 7%, 5%, 10% as the case may be, and bring goods into India. So that's at one end, they want to deter all the imports of, whatever can be manufactured in India should be manufactured in India, in Make in India. And at the same time, for impetus on impetus on domestic manufacturing, they are bringing out package link incentive schemes. In this budget also, we have got solar for the solar manufacturing, the solar equipment manufacturing, we have the scheme. Similarly, government has been bringing out these schemes to encourage manufacturing in India. So these are the twin methods government is applying for Atmanirbhar Bharat and Make in India.
I need to tell very interesting thing to the audience here is you'll be surprised that of the total expenditure that the government does on defense acquisition, will close to 1 lakh crore. 68% is manufactured in India. The government has made a budget. 68% we are going to procure it domestically. See the encouragement of the defense where India was totally dependent on imports of defense. The government decided we are going to make India as a self-dependent, independent country in the world to make it in-house. 68% outlay is a very, very high outlay. Again, come back to Saket, and I also hear from you. We were talking a lot about digital assets. Will there be a GST also on this?
That's interesting. Digital assets, cryptocurrency, they are very peculiar. Now, GST is a transaction tax. When we talk about transaction, you will have to need unlike an income tax where it's more on the net profit, your difference between the cost and the revenue. It's a transaction tax, so it's on the entire revenue, okay, or entire sale value or supply value. So you have to identify or you have to classify the asset or digital asset as we are calling it to understand what sort of tax will be applied. Currently, everything is in a limbo. The government has not clarified it. There are various speculation going on. What should be the treatment of cryptocurrency? These are new things. These are never, our tariffs, our earlier tariffs dealt with goods. We do not know whether it qualifies to be goods or service. First level of classification that we'll have to see. If someone says because it's a digital asset, someone calls it to be goods, then the classification and the tariff rate applies, the GST rate applies, which is the tariff, which borrows from Customs Tariff Act. Now, under the Customs Tariff Act, obviously, you don't have anything. In fact, no intangibles are covered there. The Customs Act only covers the tangible goods because it's import of physical imports into India. So therefore, then you are lost there. That there is no tariff entry for cryptocurrencies or for that matter digital assets. So you are stuck there now. But if you consider this to be a service, say something like an IPR or intangible property, intellectual property rights, then even in IPR it doesn't qualify because it's not an intellectual property rights. So therefore, currently if you go to see, there is no, or the third category could be a security. Again, security, whether it's liable to tax at a GST, not tax, because only securities which are under this Securities Contract Regulation Act, only those are out, otherwise securities are covered. So it's in a complete limbo, complete uncertainty in terms of how do you treat these digital assets, and basis how do you treat this digital asset, you will have the GST implication. So currently, while I was surprised when the government mentioned about the income tax applicability of, it would have been better if they would have also mentioned or clarified how do you want to treat, how do they want to treat this digital asset. Whatever position you may take, it will depend on how they would want to treat this and charge tax on it. The implication of it could be very big. Suppose you consider this to be an asset and you have supplied this asset. The other element is, what is the value? As I said, for income tax purposes, you take the differential, that is a profit margin, and you apply a 30% rate. But from a GST standpoint, the value is the complete sale value.
Yes.
Would you consider the entire 100 rupees of transaction in 18% of that? That will be really a big blow if that is the implication that is taken, which, this is something which government should clarify as soon as possible, even if it's illegal transaction. Still, otherwise they'll tend to lose revenue, or it will result in unnecessary litigation.
I think it's very well said.
Sorry, just to add one more point here, one more big challenge, okay, that we'll have in this is on digital assets is, today for compliances you will have to take registration. For investments, you and I, people don't take registrations for investments. Now, if you consider this to be a supply liable to GST, and you cross the minimum threshold of 20 lakhs rupees of turnover, which to my mind would be nothing, then every one of us will have to take registration who wants to deal with digital currency. So these are a few nuances on digital currencies or digital assets that we'll have to look at to determine what will be the tax implication. And it's completely vague and completely in doubt. What do you do in future?
I only have to add one thing, actually. We must request to the government to give us certainty to it. If you to tax me, you will tax me the gross amount or the commission amount. Give me a certainty. I don't want, after 2 years, all the people who played with this invested and trading in the digital, they get notice that you need to pay. I think there's already been some judgments or some cases have come where they have levied on the gross amount of money, or GST people say we're going to levy on the gross amount of money, not the commission. We only request there should be certainty so that we know how much money has to be paid to the government, whether we trade, we do whatever you want to do. But we want certainty. I think that is missing. I wish that would be there. Maulik, tell me one thing. I was talking about startup. Startup is the future, basically. I see a major disruption going to take place in this decade by the startup. They're not really a startup. They're doing with space. They're talking about vehicles. They're talking about everything basically, which is tangible also now, basically. Do you think government has done enough for startup? I know they made a committee to look after the entire ecosystem. In terms of tax, they just increased the threshold by 1 year, and there's a sunset clause on 23 March. I always believe the government should give in a bigger window. 1 year extension is a very less time and it gives an uncertain. What we do? We go again to the government next year. They should have given a long-term vision. I want to hear your thoughts on this. And I want
Rakesh, I agree with you.
I wanted to add on manufacturing also, where the government has extended by 1 year. But why 1 year? Why not a longer threshold, longer tenure?
So Rakesh, I agree with you, but I think that's been the hallmark of any government. Forget this government. They always give in pieces, in bits and pieces. They really want to wait and watch, see how things work, and they really don't want to commit anything from a long-term perspective. So I still believe that that 1 year window will keep on extending. We saw that for interest on ECBs. We saw that for bond payments. So most of these places we are seeing that 1 year window getting extended every year. So that's the thing. But I think the biggest disservice that the government had done to startup was when the angel taxation came in and the controversy came in, and I think government really took its own sweet time to kind of clarify the controversies over there. And that also did it in bits and pieces. I think that did a lot of damage. I think we lost a lot of time there. A lot of startups kind of really struggled at that point in time. So I think now the government has some measures. I still believe they are half measures. There's a lot of potential with the startups here in India. And if the government goes full total, we can really explore that potential with respect to startups that are there.
I have one small question. We'll have to end this session. We are just crossing the line. Brief answer, Saket, from you. What the government has given something on the advance ruling by limiting the validity for 3 years for advance ruling, even there's no change in the facts. It's something very surprising. Then why you call it advance ruling?
Exactly. Bang on. See, advance rulings provide certainty. We spoke about certainty in transactions. It provides certainty. Once the advance ruling, you are certain. At least whatever the tax position government takes, doesn't matter. You are safe, because if that's a position you have given advance ruling, it's binding both of us. Probably that's the reason why government doesn't want to get bound by the advance ruling. They said 3 years period, and after 3 years they have provided shelf life for it. And after 3 years, the question is, what do you do? Do you apply? Should you continue applying the advance ruling? Should you not apply the advance ruling? Should you again go for an advance ruling? What do you do? So that's, you are again in a limbo. So that uncertainty, the certainty that advance ruling provided, and everyone, they, see, you don't mind in indirect tax, mostly you don't mind paying tax because it's an indirect tax, so you'll regard from a customer. That's why people would be better off if you have certainties. But in customs, they have, they would have baked in and they would have recovered from the customers. But now if the certainty is gone, then there is a problem. So which government probably doesn't want to get bound. They don't want to be stuck in the position by way of because advance ruling are issued by some officers. By some officers, they don't want to get stuck time immemorial or until the ultimatum to have this advance ruling. So that's why we have done. Rakesh, one more point apart from advance ruling that I think is necessary to discuss here. It's the most impacting point on the stringent. If you permit me just 2 minutes, I want to discuss one critical point. Okay. It is in relation to the first point that I mentioned on the stringent credit mechanism. Yeah. Government has brought down few provisions in the law, which says if my vendors, so earlier we had 2 provisions where it's from a vendor compliances, vendor filing GSTR1 return and vendor payment of tax. If you satisfy these 2 conditions, apart from the other condition at a recipient of GST's end, then you are entitled to take this credit. Government in this budget has gone overboard, and they have gone really high in terms of further making it more stringent. What the government says is, apart from these 2 provisions, if in case the GSTR1 return that the vendor has filed, okay, the tax liability reported there is lesser than the tax liability he has paid, still the recipient's credit will be denied. If the vendor has taken a credit more than what is reflected in his GSTR2B returns, okay, still the customer's credit will get denied. Okay. Now, if that happens, suppose I have taken a credit because of my vendor's, vendor has reported incorrectly or something, then even my customer's credit will get denied because by relying on this provision. And if a vendor is newly registered, then the government will come out with rules probably barring him not to, or the credit of that payment or credit of those transactions may not be allowed for a particular period or may be deferred after a particular period. Now, these are the 3-4 things that the government has introduced. These are really, really draconian.
Yes.
What it does is the customers or the recipient of credits, it puts them into a very big disadvantageous position. You are asked to swim without, you learning the swimming, or without giving anything. You are thrown in the sea without a boat. You don't have any powers. Only thing that you are required is commercially you push the vendors to adhere to all these compliances. What it will lead, we'll have to see how this is get implemented by way of rules. What it would lead is litigation at 3-fold between me and my vendor and the government, and all 3 of us put together in terms of where is the fault lies, whether I'm entitled to take credit or not. And this will have a snowball or a ripple effect if this gets, because if my non-compliance because of my non-compliance may result in my customers.
This last thing to Maulik. Can you say a couple of challenges before the government right now in revenue generation in the whole scheme, or challenges before the budget, or something expectations have not been met, or you expecting something from the government which has not come? Briefly, Maulik.
So, the entire taxation on digital economy, right? Governments try to asset one part of digital asset, but the entire taxation of digital economy, which government is trying to do along with OECD and trying to bring a consensus and then implement that. I think that needs to a kind of a complete revamp and kind of relook from a thing, because India did take a lot of unilateral measures on its own in terms of taxing the digital economy. All of these unilateral measures needs to stop, and a proper roadmap needs to be given to the taxpayers in terms of what they are implementing. If they have to be implemented from 1st of April 23 and you are going to bring it only in the 23 budget, that leaves hardly any time for taxpayers to respond, to prepare, for industry to prepare their accounting systems, IT systems, etc. So that's one thing I would have loved to see in the budget, saying that a proper roadmap in terms of how they are going to look at equalization levy, significant economic presence. And the second thing is that, according to me, otherwise, from a tax rate perspective, I think not tinkering with the tax rates on a year-to-year basis is a good thing. That brings certainty, that brings some amount of kind of rationality, saying that, okay, this is what I'm going to pay for the next 2 years. So that, according to me, is a good thing. I really didn't expect that government would really tinker with the tax rates.
Thank you so much. I'll just end this thing in a minute just to let everybody know. This is actually a booster budget. You are getting a booster dosage. I call it a booster budget. And two things, especially on the infra side, I need to tell you. The outlay for the state, which government used to do every year on infra, was 15,000 crores, has been increased to 1 lakh crore this year. Never seen a jump of 6.5 times, 600%, from 15,000 to 1 lakh crore. And the government commitment on the infra side has jumped from 5,25,000 crores to 7 crore 50 lakhs crore, is again 34% jump on infra on the sectors which I said in my inaugural part of the thing. So it's an infra booster dosage budget. Yes, I agree in the first session, which was said, our economy would have gone down by 12%, but we do see a growth of 9%, 8.5%. A vision, a dream of becoming a 5 trillion economy gets delayed by around 3 years, basically. And I think, but the foundation has been laid beautifully, basically, to take India to a new trajectory level. I strongly believe India to turn out to be a very strong company in recent future, not long time. In this decade, I see a revolution change coming up in the country in terms of infra, demand, digitization, manufacturing, defense, new age businesses. This is my thought. Thank you, Nadira. Thank you, Anita. You can close it, Nadira.
I think you have closed it so well, Rakesh. There's nothing for me to add. Just to say thank you to all of you, Anita, Saket, Maulik, and thank you, Rakesh, for a very well coordinated session. I think it's been very interesting to all of us. So just want to say a quick thank you from the chamber, from ICBC, to all of you. And we're looking forward to to the budget being good for India, Canada, or more opportunities between India and Canada.
Thank you.
Thank you very much.
Thank you so much.
Thank you so much.
Thank you.